In this video, I'm going to show you how I made $1,000 off of one trade that lasted a little less than 30 days. This is a trade that I take all the time. I want to walk you through the indicator I use, the strategy I use step by step, and some real trade examples by logging into my broker. So let's dive into it. First off, here is the actual trade. If I go to my Tasty Trade broker, you can see here I entered the trade on August 20th, which aligns right here at this point on the chart. And I exited the trade right here on September 15th. You can see right here on that core lines with that on the chart right there as well, resulting in a $1,025 profit. When we factor in commissions and fees, I made $1,012.28. So let's dive in. How do I do this? First off, the indicator. Go to the indicator section, and I'm going to show you how I do this. This is an indicator that everybody has access to, but hardly anybody uses this way. Whether you're using Yahoo Finance, TradingView, your broker, you should be able to go to indicators, type in Bollinger Band, Bollinger bands, and this is what you'll see by default. This is how everyone uses it, but if you change the settings just a little bit, you can actually make a huge difference in how you read it. If you change the length from 20, which it is by default, to 200, this gives you an understanding of the overall market trend. AKA, if we are within this top range right here, the market is bullish. So let me chart this out. This is a bullish zone. If we are in this zone, we are bearish. And so what does this mean? This means that when the market's trading in this zone, I'm in a long-term bullish market, so I should be using bullish strategies. And so that's how I align what strategy I'm using with what type of market. So since we're in this zone, the strategy that I used based on this indicator was the 1-1-1 strategy to trade and make this profit. If you've never heard of the 1-1-1 strategy before, let me walk through exactly how it works. You're going to be trading this on futures options, which is what I did here, ES1. You can also do this on stock options, but it works best on futures options. What you're going to do is you're going to go 90 days out in the future. So you can go to a 90 DTE. And don't worry, I'll go to my broker here. I'll show you exactly how to structure this trade when we get to it next. I just want to chart out the strategy first. So we go to a 90 DTE trade. From there, we're going to create a put debit spread. So PDS, put debit spread, which means we're going to buy a put, and then we're going to sell a put, and that's going to create a put debit spread. Now we do this by buying the 25 delta and then selling the 23 delta. This creates our put debit spread. That is our hedge, our downside protection, but we also sell a put further out of the money to make sure that we profit on this trade, which tends to be a 10 delta. So again, there's three trade legs. There's one put option, one put option, and one put option. This is why the trade is known as a 1-1-1 trade. That's how the trade is structured. Again, I'll show you that here in a second. And that's exactly what I entered at this point and allowed the trade to ride up. So you can see here, the market was trending higher. Let me move this text out of the way. Actually, just delete it. What was happening is the market was moving higher and it recently pulled back from hitting this high. Now, again, what's cool about this indicator is not only does it show you the trend, but it also shows you some resistance levels as we push to new all-time highs. You can see here, we push into this level, we pull back, we push, we pull back, we push, we pull back. So we pulled back from this zone at the bottom part. That's when I entered the trade, knowing that we're probably going to ride this back up bullish. We got closer to the zone again. That's when I close it for the $1,000 profit. So that is how you structure the trade. Now, how do we manage the trade? We're going to close it at a 50% take profit. So as soon as we hit 50% or whatever I want to, this is going to be my take profit. And then I can have roughly a 300 to 200% stop loss, whatever I like to run with. Typically, I do a 300% stop loss. This is how I manage the trade, so that's the strategy. So we've gone over the indicator to know what the right market is for this strategy. Again, we're only going to trade this 1-1 strategy when we're above this. Ideally, look for dip buys like this. That's the strategy. Now let's go into a trade example. Let's say we were to place this trade right now. I'm going to go into the trade tab. I'm going to go into futures. ES is what I like to trade this on, so /ES. It's my go-to. Now again, if you have a smaller account, you can do it on MES or SPY or something like that. First thing we do is go 90 days out into the future. So we're going to go 90 days, which is, again, is closest to right here. You can see I do have a couple positions open already, but we're going to pretend like I don't. So the first thing we do is we're going to create our put debit spread. This is our hedge that protects and helps us generate money when the market drops so that we don't have a huge loss that we would if we just had the short put. So the put debit spread is going to be, we're going to buy the 25 delta and we're going to sell the 23 delta. This creates a put debit spread, which gives me a max profit of $2,000 and a max loss of about $400. Meaning, if the market drops, I'll make $2,000. If not, I'll lose $400. Now, in general, the market's going to trend higher, so this put debit spread will lose money, which is why it's a hedge. So we're going to go further out to the 10 delta mark. We're going to sell this option so that we actually have a profit. So now you can see here, my max profit is $4,200. But what I'm actually going to be looking for is this. This is going to be what my actual profit is, extrinsic value, $1,700. So this trade, if the market continues to trend higher, will make me $1,700. You can see here, 95% chance of winning. So the odds are really in my favor here, which is great. Now, as always, as mentioned, we have a 50% take profit. So although this is my max profit, $1,700, I'm only going to make 50% of that, which means my profit can come out to about $850 on this trade. Now, I have to put about $7,000 to put on this trade. So that means $850 profit divided by 7,000. That means I'm going to make a 12% return on my money in less than 30 days. That's typically how I run this strategy. You can see here under my positions that these are all the strategies I have. Again, they're not grouped together to make it too easy, but you can see here all the 111 trades that I have open. That's right now making me over $2,168, aka a 30% return on the money that I have invested right now, which is not bad at all. So that is the 111 strategy, and that's how we do it. Step number 1, the indicator. We only trade it during this uptrending market. Step 2, we do the 111 strategy when it's in this zone, and then that's exactly how we set it up. If you enjoyed this video, please hit the subscribe button, and I'll see you in the